Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 141 for October 6th, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. So we are recording this at 4 p.m. Eastern Time, and you should be seeing Mike Pisani's screen right now. And today I've arranged for Mike Pisani of SmartOptionTrading.com and the Option Professor of OptionProfessor.com to be here. And the Option Professor will be moderating. So I'm going to go ahead and turn it over to him.
Sounds great. Hey, Mike, good to have you back again. And definitely the people that are here that are not familiar with you, could you just give a quick background on yourself and what's going on at the company?
Hey, Jim, good to be back.
Sure.
Yeah, I've been trading for 10 years, full-time for over 6. I run a website called smartoptiontrading.com. If you want to learn more, stop in and see it. And what we do is we have a trading room, and every day we go over and we just look for what's in play, whether it's upgrades, downgrades, technical analysis, or specifically option flow that turns us on where to be. Like today, Baba had huge option flow on it that, basically told it was in play right off the bat. And that's where we try to focus on, is just try to find the names that are in play and focus on them and do our best to stay out of troubles when you have days like today where the whole world just comes crashing down around your ears because of a couple tweets.
Yeah, exactly. Well, we've got a whole group of stocks. We'll go through some of these and then we'll go into some of your picks and give people something to chew on here. The first one on the list is a semiconductor, Taiwan Semiconductor. And of course, it had a big run after Intel couldn't come up with that situation. So AMD and these guys had a nice big run. And what are you thinking on Taiwan Semi?
Well, there's really just four semis they want anything to do with right now. Mm-hmm. It's Taiwan Semi, it's Qualcomm, it's Nvidia, and AMD. Those are the four that they always come after. Those are the four they want.
Right.
What I like about this chart, Jim, it's got this beautiful consolidation pattern now for about 2 months. Right after the big move, instead of just keep going, gave a huge move, and it's consolidating it nicely. And it's have every reason in the world to come in, and it hasn't. Personally, if the market holds up, I think this one's going to go higher. They're talking about building a plant out in the Arizona area and moving a lot of production to the United States, which takes away some of the fear of that if China decides to come and try to shut down Taiwan or take control of Taiwan. As you said, they're getting Intel. Intel can't build their own chip. Intel is just failing, right, as a designer.
Right.
So that's great. So I think for me, as long as it holds this 76 area, which is the bottom of this channel, I would go long, verse that, or try it until it breaks in. I know it's a little extended, but I mean, you don't see consolidation patterns like this very often.
Yeah, it looks like, would you take the width of that range and add it to the top and get a target that way?
I don't know if I would come up with a target on this one, Jim. That's a tough call. I mean, you could say, yeah, that if it broke out, you should get another $8 move, right? In theory, give or take. I tend to look at these two candles, the high and the high and that quick reversal as the outlier. Mm-hmm. So for me, the top is around 84. You could do that. Personally, though, I think it's just a nice tight flag. And we do have earnings coming, and earnings are going to mean all the difference in the world, and that's the problem. With all the charts we're going to look at tonight, we are a week away from earnings season starting, and that's going to be the mover.
Now you got a moving average and you've got a gap in the same neighborhood around 70. If we do go south, would that be a natural place to go?
Yeah, I mean, I think if you were to go south, you come down to the first thing you probably do is stop at this gap, because this gap's never been tested here around the 71 area.
Right.
And then, if the market was really weak or whatever, I think you fill it and try to come down to 67. And you got the 100-day sitting in there. The 100-day on some names can or cannot be supported. It's very name specific. Taiwan Semi looks like it actually likes it every once in a while, so for what it's worth.
Well, since we're on this one, do you want to throw up, I don't see if we have any, I don't see Nvidia there. I got AMD at the bottom. We'll put up AMD because that was requested. Sure. Yeah.
So again, there's basically four semis that if you look at the charts, they just keep coming after. And, AMD is, you look back and you say this AMD run is actually came all the way from 16 2 years ago, all the way up now to just missed 100 at 94, right? And for what it's worth, I've been a big fan of this company. I make a lot of money trading on this one. And they have they're firing on all cylinders. They're absolutely destroying Intel, which is what Intel is struggling with. they showed Intel, you can go wide. We can make a lot more cores, and Intel's struggling to catch up with that technology. And then they're taking on Nvidia with the graphics cards. And by the way, we have an event coming up on the 28th of October where they're going to release their next generation of graphics cards and next generation of CPUs. So I don't expect if we get weakness to go too far. Your point here, we've held this gap at 74 multiple times. Right? You can see how strong it's been. You have this gap that's never filled down to the 70 area. You have another gap down here. So, you know, this move off of here was incredible. Strong name. It's in the right space. You know, if you want to be in anything, the semis are strong because there's just so much demand for them. Everything's going to you know, computerized.
Right.
And they're one of the best out there right now. And what they're doing is they're literally eating Intel's lunch.
Yeah. And what about Nvidia?
Nvidia was, you know, Nvidia made a nice trade on the open today. Nvidia had 3 price target increases today. So what's going on with Nvidia is they've had this incredible move. They have their next gen CPU graphics cards out there, which are doing really well from their perspective. They also announced they're buying ARM for $40 billion.
Right.
Now, there's a lot of question of whether that gets approved. And I don't think the concern is as much within the United States. England doesn't want ARM leaving their country.
Right.
And there's concern that if, because I think for England, it's the largest tech firm they have there, that if NVIDIA gets it, there's concern that NVIDIA, no matter what promises they make, will eventually just pull everything back in-house.
Right.
I think that deal is going to take time. I think we're looking at a year plus for that thing to, you know, to find out what happens there. So what do I think? I think NVIDIA is this beautiful chart. I think today it pushed into this gap. What's funny is it didn't quite finish filling it up to the 573. It got weak, couldn't push. I do think that if the market stays strong, this one wants all-time highs, and I think ARM's a great acquisition for them, even though it's $40 billion. It sounds like a lot, but it's not. And this stock has had, and again, look at this stock. Look at the 24-month chart on this thing, from 178 to almost 600 bucks. I mean, this is just insane on these names.
And that purple moving average has not been violated since the bottom.
That's the 50-day, right?
Yeah.
Hasn't been touched, been holding in here. I mean, dips to the 21-day have basically been buyable on this name. You know, I don't try to fight these names. Everybody's like, when you get a short, I wouldn't short this name until the market absolutely comes in. And even when the market came in March, look at how shallow the dip was on this compared to the markets.
Right. Can you put up RSI, because we're kind of near a double top there? Is it a situation where this last rally has had a much lower RSI, which would be an indication maybe of a exhaustion?
It's up here on the top. No.
Oh, okay, so it is lagging. That's the main thing. It's still in a bullish configuration there, but that's a heck of a differential between the excessively overbought and where it is now, huh?
Yeah, but it needed to come in, right?
Yeah.
You know, it's you know, this name has a tendency to get overbought and stay there.
Yeah.
But it needed to come in, and this is a nice digestion pattern, right? Came in, you could almost call this a sloppy W,
right?
And pushing itself back up.
Yeah, the only thing that would really change your tune is if it probably broke 480 and the RSI broke 50.
Yeah, I mean, you know, for me, I'm active on this one. I don't want to be buying this up here as an investment. Now, if we can get a dip on it, I would love it. You know, if you can get a dip to the, you're not going to get an easy dip to the 200-day. You'd need the markets to really come in. But notice where they bought this when it came in March.
Yeah.
So, you know, you got a dip to the 200-day. That's where I would look to buy for sure. But if you can get dip to the 50-day here at 490, that would be amazing.
Last one was Qualcomm. That's more of a 5G play, right?
Yeah, and you know, Apple's going to announce their new phone next week, and we know that Qualcomm and them have a big contract together for 5G. Mm-hmm. And you know, Qualcomm has just been one of the incredibly strong names. And again, you look at these 4 charts. Look at this gap up here. Right, this gap here never touched. I mean, these are incredible gaps. When you have a gap up on earnings or whatever the news is, and you don't test it, that's a name that's showing incredible strength.
Yep.
This name went from 93 in 3 days to 112. Held the 8-day up until it ran all the way to 124, and now it's doing very much like Nvidia, right? Didn't quite hit the 50-day, kind of digesting and curling itself back up.
Yeah.
Yeah.
Yeah, so
RSI holding in.
Yeah, they're all pretty similar. The main thing is they're all RSIs above 50, and as you can see, it's been above 50 for a long time, and the stock's been performing for a very long time.
Correct.
Next one on here is Alibaba.
Well, what can I say about BABA except wow? Um, this name, you had this huge move up when it finally broke out back over here. You had a couple breakouts on this stock, but you can see it's leaving gaps here. You had a couple gaps down here that never got filled from all the way back in the July timeframe, right? 2 power gaps, 3 actually, as it pushed up. And then it came in and it flagged and it finally took out this 266 area. You got another gap that it did fill, popped up. You had a lot of buying in China. Remember, this trade's not just here, but on Hong Kong and in China.
Mm-hmm.
Then it came down and tested the 50-day, and then it pushed up, and then you got a gap. And here, another power gap. We held it and then bounced off the 8-day and pushed right back up today. And they were all over the weekly 300s today, 295s and 300 calls. I think this.
Now, do you think today's news is going to be sticky, or you think it's just going to be a little pullback and everybody gets back on the bicycle?
So here's the real question. The market has been focusing on one thing or the other lately, right? Whether it was stimulus package, the election, Trump being sick. It's always finding something to kind of work on this wall of worry, but the market's not falling apart.
No.
And so what I pointed out to everybody today, and then, my members, and I'll point out here to you guys as well, if you look at the SPY, you had this pullback that we held the 100-day on. And then you bounced off of there on a Thursday, on a Friday, and then we gapped up last Monday. Remember that?
Mm-hmm.
And if you come in nice and close on this, I'll make it nice and easy for you guys to see this. We've held this gap. And even though the action has been nasty and choppy and wicked over the last 7 days, we still haven't violated this gap. And as long as we hold that gap around the 130, 130 area, the market to me remains in line for try to push back up. Now, this is not a pretty candle. Today's candle is a bearish engulfing reversal candle.
Yeah.
And that's saying, hey, I'm not happy, pay attention. But ultimately, we held the 8-day on the close for now.
Mm-hmm.
I don't know, Jim, and I wish I could say I knew. I don't know here. I think that
the thing that I was saying, I thought this 3420, 3430 area, which was September 16th high,
mm-hmm.
Was going to be a problem for the S&P if there was going to be a problem. And obviously, without the comment, it wouldn't have been a problem. But it's uncanny how that number and the comment came in at the same time. Yeah.
Well, again, I identified 2 grudge matches for this market. One is on the SPY, and that was the 342.50 area.
Right.
And if you look, you have a tail, an open, a wick, a wick, a wick, a wick, and a wick. You had 7 touches of this area in 9 days. Today, we just missed it by a couple cents. So close enough.
Right.
It's not an exact number, right?
Right.
This tells me that this is an important spot in this market. And until we can take that out, we're still stuck.
To be honest, I was also looking at value ETFs because obviously I have an interest in them because they pay such high dividends and they are way underneath their 52-week highs. But again, for like the 3rd time, they peaked them through some moving averages and it looked great. And then they closed them underneath the averages.
Yeah. By the way, big put order on the Qs here at the last minute of trading them.
Yeah. 280 area. I thought also 280, 281 where it stopped was also a key area for Qs. Did you see it that way as well?
Yeah, that's exactly where I have it, Jim. If you look at the QQQs here, I have it 280, 281. Same, it's not an exact number. It's an area because you can see how we trade around it. But yeah, to your point, that's it. And what did we do today on there? Oh, look, just as the news came out, we were pushing above it again.
Right.
Yep.
Probably got some stops and then that was it.
Well, I mean, everybody looked at this move and said, oh my God, what happened? I'm like, you had a vicious, the algos came in, and when the algos came in, then they triggered an incredible amount of stops because everybody was, look at the SPY. Everybody was trading to the long side. Everybody was putting their stops up. And, there was no volume in this market. In 25 minutes, we did 20 million shares.
And a lot of people were betting on the stimulus getting done pretty soon and a vaccine coming. And if those 2 things are off the table a little bit, you will have to see exactly how far the market can go without it. So
the real question is here, a part of me hopes that the stimulus deal is off the table just so we don't have, as traders, we don't have to deal with it anymore.
Exactly.
As a person who I know there's a lot of people that need that, I wish the 2 sides would get together and get it done.
Absolutely.
But as a trader, I'm just tired of for the last week, all we do is every time a little bit of news comes out on it, we pull or push.
And with the guy putting 44% of GDP into stimulus, Powell, the last thing he's concerned about is another trillion. So just do the extra trillion and go for it. Yeah.
But this has nothing to do with the Fed, and I think that's what everybody keeps saying. Oh, this is
Yeah.
Powell's fault. No, this is this is the Congress. Congress needs to come together.
Yeah, but I'm saying don't fight over the extra trillion. Just do the trillion. If you don't need the money, you don't spend it, but at least it's out there. You know what I mean? Because everything is related to COVID. You know, these states are not doing well because nobody's gone out and produced the revenues. And so it's all connected to COVID one way or the other.
It is. And, that's the other thing that's playing with the markets. We're seeing surges in countries around the world and here in this country. So it's tough.
Yeah, let's jump over to Salesforce, CRM. That was another one that was doing well until the Copsco came here. And what are you thinking here? About a 97-to-1 PE ratio, 4 million change shares, lots of action.
I'm really surprised that after that report and that guidance, they have not been able to move higher. Honestly,
Yeah,
Jim,
it was outstanding. Yeah.
it was. You don't see reports you don't see reports like that very often in guidance raises. And I have an alert set here right around this 256 area, and you can see it keeps playing with it, but it can't close it because that's where I want to own it over 256.
Mm-hmm.
Right, all this action right here. Now it came down. Unlike really strong names, it went into the gap. Right. Couldn't hold it, but it's held most of the gap. It still held a lot of it and came all the way down here, filled about half of it. But right now it's just out of play. And as a trader or somebody's trading actively for momentum with options or stock, this is not something you want to be sitting in right now. I love the name. Ultimately, if the market goes, I think this is one that drives it higher.
Right.
But it's got to take out 256. And I don't mean for 5 minutes or 10 minutes. It's got to have volume.
Yeah. And it also looks like if it goes the other way, it takes out 237 and your RSI gets under 50, there could be some downside as well because there's gaps and stuff like that underneath. Huh?
You have this gap. If the market comes in and this thing loses the 235 area, you have gap to fill all the way down to 218.
Yeah, exactly.
So nice little short. Now the 50-day may ultimately pick it up because look at how many times it does like to play on the 50-day.
How are options on this kind of deal? Are they very expensive? Because it looks like it's slowed down.
No, they're actually fairly liquid. They're pretty
and not that fat, not too fat.
They're okay.
Yeah.
Since earnings, they've been better. Sometimes they're better, sometimes they're not. But if you look like at a weekly options chain on it, the weeklies you had on the call side, you had over 20,000 calls traded today. So that's not bad.
That's a good volume. The next one up here is going to be Netflix, and Netflix did a definite 360 today. And what are we seeing here?
This has become a very tough name. I don't trade it that often anymore, Jim, because I've just I don't like how it trades.
And I think maybe the competition's starting to come in with Peacock and all the rest of them.
Well, I mean, I stream, right? I got rid of, almost 2 years ago now, I got rid of cable. I do think there's just only a certain amount of money to go around at the end of the day.
Yeah.
Right. You cannot have cable and then subscribe to everything also. And, for me, I have three things. I have YouTube TV, I have Netflix and Amazon Prime. And then if I want something else, I may get it for a short tier just to watch a show. Does that make sense?
Yeah.
Pay for a month. Sure. But, I think what Netflix is suffering from here is people are having a hard time understanding how sticky these new
subscribers are.
Yeah, subscribers are going to be if we get a vaccine, right? Mm-hmm. If we get a real vaccine, and I don't really think any of these vaccines are going to be a true vaccine. I think they're going to be more like a flu shot, but that's, if we get a real vaccine and we go back to normal, big if, how many of those new subscribers, new members stay? And that's, I think, the problem with Netflix here. And it's just tough. It's not trading badly. It's holding on. It's just, you get red day, you get a big day like you had here, this big, beautiful green candle. And the next day it gaps down, doesn't even give you a chance to get out. And
they also have saved money because they haven't put much money into content, but that's going to change over time as well, right?
Yeah, I guess. I know they're filming again.
Okay. Oh, so that's gone. Okay.
They are filming again on a lot of their shows. A lot of stuff is starting to film again. Obviously, and it's been more expensive to film because obviously all the testing and the protocols they have to put in place. And this company is a cash flow burn company. They do burn a lot of cash. To me, if it takes out 530, maybe it can push up. You know, I would have sworn in here after that big engulfing day, we were going to go to all-time highs and take out the earnings day,
Mm-hmm.
and we just can't get to it. So maybe it runs into earnings. They are the first tech company report. They don't report next week. They report the week after.
And the previous months had a lot of the higher demand from COVID, and maybe that will moderate.
Depends what you think. You know, I live in New Jersey, and, you know, watching what's going on in our area, we're seeing a lot of spikes going up in New York, New Jersey, especially the city.
Yeah.
And everybody's being a little more cautious. You're seeing cautious. You're seeing Europe again, big spikes in some countries there, like the UK and France and Spain, specifically.
Yeah.
So, you know, is this going to hold, or are we going to go back up again? And I don't know. You know, Jim, I don't think anybody really knows. Everybody knows right now that this has been around now for, unfortunately, almost 9 months in this country.
Right.
And it's becoming the new normal.
Yeah, it is. Well, the next one is your big retailer here, Walmart. I think they sold a big investment over in Europe, so they got cash out of that. But they've got a bunch of different things going on. And they came out with their own Prime, didn't they? Walmart Plus or whatever it's called.
They did. They did. So they're trying to compete in Amazon. I like to call this my favorite. I call this Wally World.
Mm-hmm.
Wally World, Dad.
Mm-hmm.
You know, this stock, they're doing great, right? So they are brick and mortar. They're doing great. Their online sales are going through the roof. They're finally starting to take on Amazon a little bit, and, you know, not to the point that we all would think, but enough that we understand that they're now becoming relevant in the online space. They started, as you said, their own Walmart Prime. Oh yeah, and there's this little thing called TikTok that they now are trying to get involved with. What makes TikTok so good for them, if this goes through, is their ability now to basically watch what you're looking at and tailor their ads to you.
Right.
Oh, you're looking at a video on exercise. Let me show you the exercise equipment in this video that you can buy at Walmart.com.
Right.
So when I look at this chart, you have this big, you know, this move had to come back, right? Anytime you, if this is anybody, you see a move like this in the market, this has to be undone. You know, the question is how much they undo, and they undid a lot, but it came in, and ultimately it kind of consolidated on the 8 and the 21 day and pushing back up here. And as you point out, RSI never went below the 50% mark.
Right.
You know, again, what I don't like is money's been flowing out, but if the market's going to go, and if we're going to have another resurgence, I think names like Walmart and Amazon and Shop and, God, I can't even remember, I believe I'm going to say OSTK, but, you know, Etsy, all these online retailers.
Target as well.
Target.
Pretty good, yeah.
But Target doesn't have a huge online presence, but I love Target for different reasons. I think Target's killing it right now. But these online retailers, if we're going to have resurgence, they're going to be the winners.
Right. With regards to what's next up here is Morgan Stanley.
I don't know how to read the banks.
I think you read the banks by looking at the long bond. If the long bond's going to have a yield that spikes up, that's going to give them the spread that they might need. And I think the lower you see the TLT go, the closer you are to getting the banks to go. That's my view.
I think I have this view right now that I think the banks are dangerous here. And
yeah, well, you know what's a danger is if they start having to come out with 6 months of delinquencies.
Yeah.
Maybe start announcing that these things are bad loans.
Well, I know some people who are just maxing out every credit card they can right now.
Right.
Right. They have a tremendous amount of exposure in the mortgage market right now.
Right.
In the commercial space and the corporate space, they got to be shaking because, you know, malls and these corporate offices, they don't want, they might be done. They might go, we don't need this space.
Right.
And so I look at the banks, and everybody keeps saying they're cheap by the banks. And I look at this and say, what's the catalyst? There's no interest rates. They can't do buybacks. Their dividends are capped. Yes, Morgan Stanley's been one of the better banks. They had, and most of the banks, and Morgan Stanley was the best of them, had incredible earnings last report because of trading revenue.
Right.
And they specifically said, there's no way we're going to do that again because look at the move we had in the markets.
Right.
So where's the money coming from?
No, it has to come from a more normalization of the economy. And it has to come from some kind of a yield differential, because as you see with Europe and Japan, if you want a flat yield curve across the whole thing, you'll never get inflation because there's no money velocity, and you'll never get banks to go up.
Yeah.
So I think Powell knows that, and I don't think he minds seeing some decay in the TLT, which it's been going down pretty good. And if that were to really go down more in the next 3 to 6 months, I think that could be the key. I mean, that's just my opinion.
Well, Powell and the rest of the Fed chairman have all said interest rates are frozen for the next 2 years.
But not on the long end.
Right. But that doesn't help the banks much.
Well, aren't mortgages generally 20 years?
Correct.
So if that yield went up and gave them something to work with, it would be better than nothing.
I guess, for my opinion, if you're a long-term investor and you're not selling banks, you don't need to sell for 20 years. Yeah, the banks, you want to buy a nibble on the bank here? Sure. For me, I need to see something before I want to get involved.
Nah, you're looking for beta, and there's no beta in these things.
I see downside risk.
Yeah, right. I mean, if this thing got above 54, then it would probably hit your target to get above this cloud and all that kind of stuff. Then, of course, and if it was happening in relation to something fundamental changing, like the economy is getting better, like the yield curve steepened, then and now it's breaking above 54, yep. Then of course you would go to your interest list.
Yeah, or everything starts. But right now, I just look at this and say, to me, I have too many negatives on them from a fundamental. I'm not a fundamental guy, but I just have too many negatives fundamentally right now in my head.
What about WFC? I'm always intrigued on things that are at their lows. Freeport-McMoRan at 5, that kind of stuff.
I mean,
but this stuff, I don't know if you can bet that it's going to have a turn, because
they can't get out of their own freaking way.
Exactly. First, they had the problem with the credit cards, whatever they were doing with those accounts. Yeah. Then the guy comes out and says, minorities, we don't have enough of a talent pool. I mean, these guys should just shut up and just keep working.
I mean, even Warren Buffett finally pulled the plug.
Yeah.
If I'm going to trade a bank, Jim, and I'm going to get off this chart, if you don't mind. To me, JP Morgan and
you got to go with best of breed, yeah.
Our best of breed, right? Yeah. Safest bank to be when. I like this name, holding in well. I like the Morgan Stanley chart. Bank of America has been trying to hold in there well, but honestly, to me, it's JP Morgan. I'm not a fan of GS anymore, this name, but the chart's better than most for what it's worth. But
well, here's one that would have given you a lot of action in the last couple months. UPS.
Well,
that was up and away.
I mean, we're talking about a paradigm shift in how we do business in this world, right?
Right.
And, again, I'm always a fan of this. Look at this gap, right? Power gap up, not only holds it, consolidates for, 8 sessions, gives another massive move up, and now just continues to go. They raised their rates. Nobody's even batting an eye at them raising their rates for the holiday season.
Right.
Nobody cares. I mean, I've been to the mall once since February.
Oh yeah.
And my daughter and I went in just to look at it, and the desolation was incredible.
Right.
It has 3 floors. The first 2 floors were mostly empty, and there wasn't anybody in there, which was nice because they didn't want to be around people. But I mean, I won't go to a mall right now. I'm going to do everything online. I'm doing everything online unless I have to go.
So those Jersey malls like Willowbrook and Paramus Park and Garden State Plaza, those are the ones I was familiar with. Mm-hmm. They're probably hurting, right?
They're getting killed.
Right.
And again, then that goes back to the banks who own the loans on that commercial real estate.
Right. Okay.
Right. So they're funding. I know there's the big Starwoods, right, who holds a lot of these leases for them, but ultimately they're financing that through banks.
Right. Right. This is also a big e-commerce play, because if we're going to go e-commerce, which is what we're going to be going, it looks like, for as far as the eye can see, after you do e-commerce, it's got to get to you, right?
Yep. I mean, personally, I've been waiting for a dip in this or FedEx, and we can't get one.
Yeah. Because everybody knows these guys are going to be loaded, because, people have gotten used to buying online, and it's very easy to buy online. And after you buy online, it's not going to get to you by osmosis, I
mean, honestly, I was hoping we dip. We couldn't even dip below the 21-day, the 50-day. Look how fast this thing's still coming. Look at the angle of attack on the 50-day, right? Just incredible move. Even the 100-day. You don't see this very often. Now, if the market sold and we got a nice dip down into this, God, if we could get to 134, I would think I'd buy this thing hand over fist.
And I mean, I see this as a divergence. I don't know what you see, but I mean, this is all green on the last high. Now we've made a new high, and it definitely is nowhere near the high green area. So I view that as a divergence. And sometimes on a divergence, if this thing started breaking under 160, 160, or even 165, it might be telling you something here.
It could.
For a short-term trade, maybe down to the purple line.
Maybe you get a quick trade to 157, which is
Yeah.
right now at the bottom. But yeah, but that, I don't think you're going to get more than that here, unfortunately. And so
No.
if you're looking for a dip, that would be it. You should be looking at it. They're going to have earnings coming up, but I expect earnings. And if you don't like this one, you could trade FedEx. I mean, both of these. UPS is all-time highs. FedEx is not. It's been the weaker of the names. But remember, FedEx cut off Amazon. And FedEx is now doing this without Amazon, which is impressive.
Isn't FedEx a little bit more expensive than UPS too?
I don't know if that's true on the primary way they do shipping, which is ground. That might be on overnights.
I got you. Next up here, we already hit Nvidia. So WWE. Is that the World Wrestling Federation?
That is the World Wrestling Entertainment Federation.
God, I don't even know they're still around.
They never go away. Bring back Andre the Giant.
I was gonna say. But hey, listen, people do them, but it looks like it's been deteriorating all year long, huh?
This thing had a little over a year ago, had this massive move, and you can just see this steady series of rolling over and keep coming down. And again, look at this pattern right now. Here's your March lows, and you're just doing a slow rollover, right? You're starting to create that slow rounding top and rolling back down. I don't know. I mean, here's the problem. Are they actually doing anything right now with coronavirus? They've been pretty much out of play. They can't do a lot of their specials, right? Everybody, I don't know if I don't follow it. I don't know if they've gotten back to like the NFL and baseball and the NBA where they have something going on.
With TV rights, but nobody in the stands.
Yeah, exactly. Can they make money that way?
It looks like it might be setting up a 1-2-3 formation. So if it held the 37 level and then started taking out the 41, you could maybe make a case that there's a trade there to 45, maybe.
You can. I could see that a big move, but but that move is probably not likely to come unless we get earnings, right? That's an earnings move where they come out and they look at that and they say, okay, we're going to buy it here, and you get this lightning flash move. Right now, if you're trading it, and you want to own it, your stop has to be at the recent low right here, which is right around the 37.80 area, 38 area. That's where you put your stop. If it can't take out the 21-day, and to me, that's what's so weak about this name. It's not even taking out the 21-day here. I don't know that I want anything to do with this. I think there's better names to trade.
Oh, yeah. Well, no, like I say, somebody has an interest in this. So if you had an interest in it, playing it on a break above 41, or if you want to do something here with a stop underneath 37, seems like the only two things. Huh?
Again, if you want to, but you know what? I get if you have an interest, but this chart's been dragging this chart has been just trailing the entire market for this entire recovery, right?
Why go into a bad neighborhood? There's plenty of nice neighborhoods out there.
It's it.
Yeah. On the Qs, how do you feel about the Qs? Like, do you think the Qs is a fantastic one-stop shop rather than going to try to buy tech stocks and semiconductor stocks and, a mega cap value, a mega cap growth? The Qs can be a one-stop shop for all that?
The Qs are great to play momentum and the big and technology stocks. The top 100 stocks, right?
Mm-hmm.
I like it for that. It's a great read of what's going on, but there's so many names that it doesn't pick up on. That's the problem. And it's very prone to one big company in particular.
Right.
Apple.
Right.
You can often look at Apple, and however Apple's trading, often that day the Qs trades with it. Right? You go on a 5-minute chart and just look at it and watch it tick for tick. So for me here today, tried to break above. We talked about that 280, 281 area. That was the grudge match. Came back in, and now on the 50, the 8, and the 21. You have a tight cluster moving averages here. It's in the middle of the Bollinger Bands. This was leading us, right? I mean, look at this move. You got this big blow off top. Then it let us down. It's been trying to lead us back up, but now today, not so good. it's tough here. I don't know. Ultimately, this thing can come back and easily retouch the 260 area. This market, Jim, unfortunately, right now for the last week is really not signaling what it wants to do,
Right.
and that makes for very tough. So, long term, I think this market's going to be okay. I think we're fine at the moment. I think the market really is just wants to get through the election, unfortunately.
What are we thinking on Apple, since we brought that up, and it is a big part of that thing? Is Apple going to be able to be bought between 80 and 100, or was that a pipe dream?
I've been watching, so it filled this first gap, came down. This second gap, it hasn't hit it yet at 100, right? And as you point out, has this move down to the 96. That would be a gift.
Okay.
I don't think we're going to easily get it, Jim. I mean, so again, look at the cues. Again, look at the cues. Look at Apple.
Yeah.
They're almost identical.
And they're also hovering at that 80. So it's a pusher, shove or push here.
Now, what Apple does have is next week they have their phone event.
Okay. So if that can't get them going, then you're going to get the prices we're talking.
If that can't get them going, yeah, you could be in trouble. And again, look at the move. But again, look at the move this thing had.
Yeah.
Just this incredibly huge move up here on the split. And the one thing that I always crack up is everybody's like, everybody should split their stock. Look what happens. Like, there's no new value added for splitting a stock. You do a 5-for-1 split or a 4-for-1 split, your stock is not worth anymore. It was just people buying it for no real reason.
Yeah, things that don't make sense don't last, and it doesn't make sense to buy a stock just because they split.
Right.
Just like it doesn't make sense to buy a stock because you can buy a slice of it for $5 now.
But long term, I still love Apple.
Oh yeah.
I don't think this is a name to be worried about from a long-term perspective. If you manage to get a gap fill down there to that 96 level, I'd be buying some for long term.
Yeah, where's the 200-day? Like about 87, right? So
Yeah.
Anything between 87 and 100 would be a hell of a good long-term maybe shot at this thing.
Yeah, I mean, and I don't think you get that. I think you need the market to really sell to get to the 200 level.
It's how many people bought because they expected stimulus to get passed before the election, because they just, the vibe was that it was maybe going to happen.
I don't understand that. And for me personally, and I like to leave politics aside because it doesn't help us trade.
Oh, no.
But neither side wants to give the other side a victory right now, right?
Right.
So why would you come to an agreement?
Right.
Why would you help? Why would you perceive to be weak? And I mean, just, that doesn't touch on politics. That just touches on the nature of what's going on with the election cycle.
And when the budget deficit goes to 5 or 10 trillion and the national debt goes to 27 trillion, and we're in a situation like this, they really shouldn't be quibbling over a half a trillion or something like that, because they're just going to borrow it anyway from the Fed. You know what I mean?
It is what it is. I mean,
yeah.
I don't know.
Because when they took away that $600 supplement on top, that definitely took a little bit of a pinch out of some people.
Well, unfortunately, there's a lot of people who really need that out there.
That's what I'm saying.
And, that they could use that. There's a lot of businesses that can use another loan. And I'm watching the airlines, which are screaming bloody murder, but I have a little bit of a personal problem with the airlines, is that these jobs aren't coming back. How many times are we going to pay for people to stay furloughed for jobs that are not coming back for 5, 10 plus years?
And the fact that they blew all their free cash flow on buying their stock back at the highs.
Yeah. Somebody said they should do the TARP program. I kind of agree with that. But I get it. I feel sorry for all these employees, all these, airline employees who are furloughed and facing a layoff, but those jobs aren't coming back.
Right.
So what are we going to do? Just keep paying for forever in perpetuity? I don't understand how.
There's some people who believe we're going into structural stimulus, which means it's not a stimulus for a short period of time. It's structural, meaning it's going to be there for a long time.
That's scary. I feel sorry for our kids.
Well, what about at home? At home, had the big run up towards 25, pulled back to 15, and now it's what is that, about a 50% throwback for the?
What did it do? It ran up to again. I love when Stock Charts does this, goes and consolidates it. But yeah, it had the big move all the way up here to what, 24 something.
Yeah.
I don't know this name well. I know it had a huge move. I know you had, again, when you look at a chart and you see a big gap like this that holds and never gets touched, you want to be long of it when it takes out the candle, the candle that made the gap, right?
Mm-hmm.
Very, very simple. If you got long here, you had a huge move up. Held the 8-day through this whole stretch. Now, curling back up here, CMF shows money starting to flow back in a little bit. I don't know enough about this name, Jim, to give good advice on it other than from a technical standpoint. Held the 50-day, curled up, name still looks good. I'm sure earnings are coming again in the next month or so, and see what it does from there.
Yeah, they got the word home in there, so anything that has anything to do with a house or home seems to catch a bid. So,
Well, I mean, you have a housing bubble that's taking place outside the big cities.
is the flock into the suburbs of Jersey still going, or has that petered out a bit?
Massively still going.
Oh, massively still going. Okay,
Yep. Nobody wants to live in the city.
right.
I mean,
Well, nobody. Yeah, you can't use mass transit. You can't.
I mean, just not. There's no theater. The restaurants aren't open. The bars aren't open.
Yeah.
All the reasons for living in the city just aren't there right now.
Yeah, similar to Las Vegas, where no shows, no go.
Yeah.
So this is one I don't know anything about here. CVAC. You know this one?
No. So obviously this is an IPO,
Oh, okay.
right? You can see it just started trading back here on the August 12th, 13th. I have a very simple way I trade IPOs, Jim. When you take out one high, I get back in it again. Does that make sense? Depending on how much it's running into it.
Right.
Most IPOs do this. They come out and if they're good, they get this incredible pop. And you look at this thing, I don't even know what it IPO'd at, right? But it went it opened up at 35. I'm going to guess that this thing probably IPO'd in the 20s. And, you got this move up to 85. And now, doing what it does. It's just coming down and it's finding itself a footing. You had a nice move today. I don't know anything about this name. Obviously, it looks like it's an international stock by the name,
Right.
PV with the after it. I don't know enough about it. This is not my cup of tea. But if it can clear this area, and the only thing I'll say this, if it takes out, you see all the candles that kind of took place right around this 56 area where it went to, 56.25?
Right.
That would be an area that if it could take that out and had volume, I might look to try it if I wanted it. But other than that, I like to, IPOs, I'm not a big believer in most of these. I mean, even look at Facebook, right? And remember that thing?
Yeah. Oh, yeah. Went down to 12 and then a zoom from 12.
Yeah. All right. So, this is a very, let me just pull this up from people learning. Everybody thinks IPOs just go up, up, and up. That's just not true. This is a monthly chart on Facebook. Here's your IPO on a monthly. This huge move up, right, to 46, and it came down here, like you said, all the way to 12, digested, pushed up. Then it finally took out the IPO high, and since then it's been off to the races. Well, that's the type of action you're looking for.
Yeah, you're looking for it to make that big high, then come down, and then once it starts taking out the big high, you try to get on board. Why don't we talk about one that I think had a great story, Snowflake, SNOW?
Yeah, I mean, so Snowflake, for what it's worth, is still not a profitable company, but they have incredible growth right now.
Yeah. And their customer base is fantastic.
Great customer base, great growth rate. However, they are one hack away from huge problems.
Okay.
In the space they're in, because again, they're storing everybody's data for them.
Right.
But
don't they have a deal going with CRM?
Yeah, the CRM owns a piece of them. There's a lot of people that were involved in this one.
Okay.
But here's what I didn't like about this. So originally they were talking about this thing IPOing down the 90s. They put it out. Then they increased the amount of shares, increased it to 110, and this thing opens at 215,
right.
and immediately jumps within 20 minutes to 319. That's just stupidity.
Yeah.
Right? To me, again, remember 110? This thing was either horribly mispriced or it's extremely overvalued. Now, I'm not sure which one it is.
Yeah. Well, it hadn't been able to go back up above 300 very well, so maybe it will go down and fill that gap a little bit.
But right now, you got to watch this 215 area. If it continues, if it loses that again, it has problems. And I would say if it takes out the 260 area, maybe it can try to push.
It's a heck of a story, though.
It's a great story. It
What
really is.
about the payment processors? The modern ones are PayPal and Square, and the old ones are Visa and MasterCard. Let's look at
Love me
Square.
some Square. Been trading this thing nonstop this year. Up here, it's getting a little harder, Jim.
Yeah,
Again, you look at the size of the move, and you know, all the way from the lows of 36 to 182 bucks yesterday. Okay, are they worth that? And I love this company. I don't think they are. I think they're obviously part of the new economy, right? Electronic
right,
payments.
right.
But the 50-day is support right now. So if you pull to the 50-day, you try to buy it until it breaks there off of that. And right now, it's just too elevated for me to touch as we're heading into earnings seasons. And the other one is PayPal. PayPal's been around a lot, a lot longer, more aggressive. Again, another huge move on this one from 85 all the way up to 210. Not as much as Square. Again, these names are changing the dynamics of the world, how we do it. Love them. And then you have Visa and MasterCard. And, to me, Visa here and MasterCard look a little bit more attractive to me only because they pull back and they're
Yeah,
giving an entrance.
yeah, a little bit of a better value, closer to your moving averages, stuff like that.
Yep. And, the other thing is they still, one of the things, nobody talks about this anymore, but the China trade deal did open up China to Visa and MasterCard, which wasn't open to them before.
They all seem to be hanging around that 50 RSI though. So if they do start headed south, that would not be good.
Nope. But again, I'd like to see these things wake back up because when they're strong, the market's going to be strong.
That's what I was going to say. If the market is going to be strong, then they're going to go. But if we had a pullback for whatever reason, they certainly would probably participate in it.
Yep.
What about CCXX? I never heard that one.
Don't know that one.
Churchill Capital.
Well, this is another IPO this year.
Oh, it is okay.
Right. This came back out in April. This is not heavily traded.
No. Today
I mean,
it did 4 million.
yeah, but look at through here when it was IPOing, it was doing
Okay.
500,000, 300,000, right? So something here on this day, maybe it was earnings, whatever it was, ignited it. And since then, volume has been more involved in the name. Right now, this is the place to watch. As long as it holds above 10, you're holding the IPO low. It loses that, it can go lower. To me, this name's not acting well. Can't reclaim the 8-day and hold it. I would rather avoid this name here.
Right.
Yep.
Well, we went over the last one, which was AMD. So why don't you take a few minutes and just give a little bit of any stocks you'd like to highlight, and then of course explain to people how they could, get in touch with you, subscribe to what you're doing, become one of your members, and what they get out of that.
Sure. So, we're in a rough spot right now, Jim, in this market. And, the one thing I tell everybody is there's times you have to learn to be more careful and sit on your hands more. And right now we're definitely in one of those with the way the market's trading. Now, this could change tomorrow, right? But for whatever reason right now, this market doesn't want to let loose. For me, some of the names we went over, I like Apple long-term still. But it has to, the market's got to straighten itself out. And I really like AMD, and I love what AMD is doing. I know it's run a ton, but I still think this name is just doing great because they're killing Intel. And they're just taking this old tech company and absolutely, just taking them to the woodshed. Other names for me that are interesting here are Roku in the streaming business. I know Roku hit an all-time high today. But this name has been consolidating. It hasn't had the big move a lot of these other stay-at-home names have had, and I think this one is just starting to perk back up again. That said, I'd rather buy a dip. If I got a dip back to the 50-day, I think that would be a better place to go into it. And I know I talk about Twitter way too often, but Twitter put in a 52-week high today. And this name has just been slowly waking up here and just grinding up. And I like this name. And if for some reason TikTok deal doesn't go through and they get banned from the United States, that's huge for Twitter and for Snap. By the way, that is a death nail possibly for FSLY. FSLY, most of their business is with TikTok. So if they got kicked out in the United States, that would be a huge, huge problem for them.
Now, if we change administrations, would the same themes be going on? Like, going after these companies?
No, in my opinion, no.
That might be very bullish for China.
Well, I think China, there would be no further repercussions for them to worry about at this point.
Yeah.
I think, you know, we would see. So I think the mantra change would be this: you would see an attempt to roll back a lot of the corporate tax cuts that Trump put in place.
Right. Well, he
Not
already said,
complete.
yeah, going from 21 to 28.
Yep. So not completely, but that would give the companies a hit. But
Yeah.
I don't think you're going to see the constant talk of break up everybody, break up Amazon, break up Apple, break up
Right.
Facebook, right? I just don't see that as a big thing. And speaking of that, on Amazon, you know, Prime Day next week, this name typically runs into it, and today it was just weaker than anything. I'd be careful here, but I do think that this name, it's going to be a very strong seasonal season for it. I want to keep my eyes on it.
Yeah, I think the China thing, the deficit is still enormous with them. So they had to pay some tariffs and they've had to deal with some unpleasantness, but they're still doing fine over there.
They're not only doing the fine, they don't have the coronavirus is just gone from there somehow.
Right. They got on the mask pretty early.
Yeah. So a little bit about me. My name is Mike. Smart Trading, smartoptiontrading.com is my website. You can come in here. I do teaching, but mostly click on live trading alerts, and it'll tell you what I do. So every day, get up in the morning, start posting stuff to you guys about members about 6 a.m. I do a video every morning telling them what I'm looking for. The room opens just before 9. We go over setups, things that have changed. And then during the day, real time on Twitter and also live in the room calling trades, option flow, names that are in play, names that are moving, what's going on, and what really we should be looking at that day. And then every night I also do a recap video to help everybody out. And on Sunday I do charts. So you can come in if you're interested in learning about this. It's $25 for the first 30 days and automatically renews at $100 a month. I think it's a fabulous bargain. We have a great room, a nice group of community people there, and everybody throws out some information, offers something back to the community, and it just creates a nice trading environment where people just get along, and we keep politics out of it 99% of the time.
Yeah, everybody who has a room says you bring in politics, you ruin the room.
Yep.
And that's as easy as it is because you're not there to, change the world. You're there to make some money.
Yep. And that's when we start getting there. I'm like, nope, no politics, leave it alone.
Yeah. With regards to ideas, though, everyone is sharing, and so it's possible you could, find some things you're not aware of that could be helpful.
I can only watch so much, right? So the more eyes you have is always better, Jim.
Right.
Bottom line is,
Yeah.
one person can only keep their eyes in so many places. The more eyes you have, it gives you ideas or you see something going. So yeah, more is always better.
That's the concept. All right. Well, that's the way you get a hold of Mike, and I suggest everybody do that. And there you can see some information. As far as myself is concerned, optionprofessor.com is the website, and then we have a weekly market update, which we tell you basically what's going on with the markets, and then certain things that are working, certain things we think are going to be working, and it covers everything from stocks, bonds, gold, silver, interest rates, the dollar, the whole 9 yards. And you get it free of charge. So basically go to optionprofessor.com, put in your information, and next week you'll be in the queue and you'll get your weekly update. Right now, I am going to send it back to David. Mike, it's always great to talk to you. Hopefully we can do it again pretty soon.
Thanks, Jim. Nice talking to you as well.
All right, thanks, guys. Great show today. And just a quick reminder for everyone listening, be sure to subscribe to Timing Research on YouTube and your favorite podcast network to get instant updates on new Timing Research shows and presentations. And you can also go to TimingResearch.com to get access to any of the past episodes, or as well as this one as soon as I can get it posted. So I just want to thank my guests again for today, Mike Pisani of smartoptiontrading.com and the option professor of optionprofessor.com. Thanks, everyone.
Thanks, guys. Have a good one.